Let's have a look at now. Let's now have a look at the setup number 3, which is the rejection setup. I think that out of those 3 setups I'm showing you today, this one is the hardest to understand. The reason probably is that it takes a bit of discretion to say if the setup is there or if it isn't there. What we are looking for in setup number 3 is sudden price reversal, which could be, for example, pin bar pattern. In this case, the pin bar is right there. This is a pretty significant pin bar, very strong one, so in this case it's pretty easy to spot this pattern. But as I said, the profile is versatile and it's not time frame dependent. So if this was a 30-minute time frame and we switched it to 5-minute time frame, there probably wouldn't be a pin bar on 5-minute candles. There would, for example, be something like this, and there wouldn't be a pin bar. But this is also a sudden price reversal. So you need a little bit of imagination to select those areas. And when you see such a strong rejection area, you use the flexible profile only for the area with the rejection. So in this case, this is rejection of higher prices. This is rejection of higher prices. Rejection of lower prices would look like this. And as I said, you select the area and you look in the rejection area where the volumes were the heaviest. So in this case, the heaviest volumes were right there at this volume cluster that got created within the pin bar, within the rejection. So you mark the area, you mark the level, you draw a line, and then again you wait for a pullback, and when the price touches the line, when it returns, you go short. You go in the direction of this pin bar, of this formation. So if there was a selling formation, like a selling pin bar, rejection of higher prices, you go short. If there was a rejection of lower prices, you would be entering a long position. But you will see that in the examples. The reason behind this is that strong sellers, strong and aggressive sellers, were rejecting higher prices. So the buyers were pushing the price upwards, but the sellers were really aggressive and they pushed the price aggressively lower. And this is the place where the sellers were most aggressive. So this is the most important place which the sellers will be defending when the price comes back to this area. So for that reason, you'll draw a line there and wait for the price to come back, and you go short. Alright, so let's have a look at the examples we have. In the left picture, you can see a rejection of higher prices, and again you select with a rectangle with a flexible profile the area where the rejection occurred, and you see that the volumes were the heaviest right there. So you draw a line and you wait for pullback. This is a pullback to your line, and because this was a rejection of higher prices, you go short, you enter a short position with a limit order. Simple limit order will do. So let's have a look at the second picture. This is a rejection of lower prices, pretty strong rejection of lower prices actually. So again, you select the rectangle with the rejection, where the rejection occurred, and when you do that, you see that the heaviest volumes within the rejection were right there. This is the most significant volume cluster within the rejection, which means that strong buyers were aggressively adding to their positions there to push the price upwards. So what you do is that you wait for a pullback to this area where the volumes were the heaviest, and you go long from there. And that's it.